welcome to a unique initiative by ICICIdirect, and this special program focuses on the theme called Fire Stocks. Fire Stocks is something, which will give our millennial investors a view into what they need to do for next 10 years, the stocks that they need to invest for next 10 to 15 years to make and create wealth for themselves. To talk on this subject, I have with me Mr. Chirag Shah, Vice President Research, ICICIdirect. Welcome, Mr. Shah.
Hi, good evening.
Good evening. Chirag, FIRE is a concept, financial independence, retire early. It has gained immense popularity among youngsters, and it's a program of extreme saving and investment. When we talk about investment, equity market is something which everybody would be interested in. So, please tell us, like, if I'm in my late 20s or early 30s and I want to accumulate and, in a staggered manner, a few stocks that would create wealth for me, how would I go about it?
So we would just, before coming out with the stock names, I would just would like to mention that the secret to stock investment success is just a very simple formula. If you start early and if you allocate well and if you can ride on it for a long period of time, the wealth creation will be enormous. So that is the formula, and that only you have to apply. There is no other way out. So there is no shortcut to success in stock market investing, may it be millennials or baby boomers or any category of investors. So it applies for each and every category of investor. Secondly, with respect to this session, which is mostly dedicated to the millennials, the sectors which are likely to boom going ahead is the sectors which are seeing disruption and players which are spearheading disruption in those categories. So sectors like IT, Pharma, consumer discretionary. And if you see, all these themes are weaved around millennials, their lifestyle, the way they live, the way they earn, the way they spend their money. So basically, these are the themes which are going to prosper and create value and wealth for the investors going ahead. So the most of our picks will be across these particular themes, and it will be divided equally into large caps as well as into mid caps. But as a research house, I would just like to give a caveat. We do follow certain filters, certain restrictions. We look at stocks which have generally consistently generated very consistent return on capital employed. So that is the number one criteria for us. So a company which generates decent amount of ROC over a period of say 5 to 10 years or 2 business cycles talks a lot about itself or its business prospects or the management that is spearheading the company and the size of the and quality of the balance sheet. So this is the most important factor that we look into while recommending stocks to any category of investors. So moving on to the large cap space, what we like is the number one is from the financial services space is Hdfc Bank. Now, if you see, Hdfc Bank is a no-brainer and it's a very common brand among millennials, even if you are a market-savvy person or not. A consistent company which has grown its profit in excess of 23% over the last decade, grows its business at 20%, has a very decent track record of underwriting risks, because underwriting risk is the major criteria in the banking and financial services space. If your underwriting practices are not good, wealth creation will not happen in that particular company, because sooner or later they will face issues of asset quality. And that is what the other banking companies have been facing in India. So Hdfc Bank is a clear performer and a standout candidate in our. So Hdfc Bank is the first recommendation. The second one is Bharti Airtel. Now, in the era of digitization and digital technologies and the way we consume data in phones and laptops and iPads and whatnot, so Bharti Airtel is a clear beneficiary out of there. And if you see the way industry has become a concentrated one. 10 years back, we had 9 to 10 odd players in the industry, and now we are left with 2.5 kind of players in the industry. Only 2 players being dominant, stronger, and able to survive the onslaught of competition. So I believe with greater focus on ARPU, tariff hikes coming in, and huge focus on non-telecom businesses like data centers, data centers, and other digital technologies, probably Bharti can be a big multi-bagger or a wealth creator from here on. Because I believe deleveraging process, free cash flow generation will be the key triggers for this particular stock over the next 5 to 10 years. And I believe one should invest in a company like Bharti at this point in time. The third company is TCS. It is, as we all know, it is India's largest IT services company, a company which comes from stable management of Tata Group. And if you see the way the stock has compounded in terms of profitability, the profits have grown at 15%. So let's see if anyone compares between investing into an FD, say if it was generating 7% return 3 to 4 years back, the profits of this company has grown at 15%. So if you had invested in TCS, you were far better than investing in an FD with the safety of return. And TCS also offers a decent option value of dividends and consistent buybacks that the company does. So the amount of wealth, shareholder wealth creation that has happened and that can happen going ahead is humongous, because we believe that again TCS from a high single-digit growth company, now the company is evolving into getting into double-digit growth rate over the period of next 5 to 8 years, given the dynamics of the business has changed, because digital, cloud computing and other avenues of technology are taking the lead, and probably TCS being the leader probably will execute far better than its peers and will create value for the shareholders. The fourth stock in the large cap space that we would like is Ultratech Cement. It does not belong to that niche category of disruption and IT and digital. But again, if you look more of conventional idea, but if you see the Indian GDP growing by say double-digit growth over the next 5-10 years, you need huge amount of infrastructure creation. And cement being an ancillary local commodity stands to benefit the most, because Ultratech being the leader, the 23% market share and 110 million ton capacity in the industry, has all the wherewithal to take the benefit of this growth rate in the infrastructure cycle going ahead. And the way the company has grown its portfolio and market share and geographical penetration, I think none of the companies in India will be able to replicate such kind of a business model. And the company is, despite of being a capex heavy business, also plans to become net debt free by FY23. So probably Ultratech deserves a huge amount of re-rating, and the kind of 20% kind of earnings growth that we believe that the company can deliver over the next 3-4 years, probably stock can do wonders from here. The fifth stock now I'll move on to the mid-cap space. So in the mid-cap space, probably the first idea that we like is Kajaria Ceramics. Now again, Kajaria, we all go out and we decor our house and furnish our house with tiles and ceramics. So Kajaria is the largest manufacturer of vitrified and ceramic tiles. So if you look at the operating history, the company is a 30-year-old company, and when it started, it had just 1 million square feet meter of capacity. And today, as we are talking, it has 73 million square feet meters of capacity. So 70x scalability that the company has seen, and probably still the company believes it can grow into double digits going ahead. And with the kind of tailwinds this sector is facing, probably Kajaria will see a good amount of margin expansion also. Because apart from being the largest manufacturer, it is trying to expand its capacity on an outsourcing model, wherein it is not creating capacity on its own, but is trying to get in arrangements with the third party or the unorganized players and use their capacity and use its own distribution strength to garner market share and volume growth. So probably Kajaria is another stock that we reckon can do very well over the next period of 5 years. The second stock would be Info Edge. So now Info Edge is again the new era kind of I would say a digital platform company, where it is a host of businesses. The core business being the recruitment business, where it has created a brand for itself, Naukri.com. So Naukri.com has been doing pretty well at a scorching pace of 15%, commands a decent EBITDA margins of 50% in the services oriented industry. And secondly, what side by side, what the management has done over the last period of 7-8 years, they have invested in startups. So since India, there are no listed startups, so a quasi way of playing startups is to buy Info Edge, because it has invested into companies like Zomato, the most famous delivery company, food chain delivery company. Then it has also invested into Jeevansathi.com or some real estate startups as well. And as we believe that next 2 to 3 years, you will see the listing of all these startups coming into the market, and which will create a huge option unlocking of value for the company and its shareholders. So Info Edge definitely is a good bet over the next 2 to 3 years. The third stock would be Voltas Limited. Now Voltas is again the market leader in the unitary cooling method, or the AC market to say so. It commands a market share of 26%, and over the last 3-4 years, it has gained market share to the tune of 3 to 4%. Primary by launching new products and increasing its distribution strength across pan India. Secondly, what they are trying to now do is, from a single product company, they are trying to also diversify into other consumer durables like washing machines and refrigerators. For this, they have entered into a JV, 50-50 JV with Aclinic and has started a subsidiary called Voltas Limited. So now that is a place where there is a huge amount of business growth for them, because they are just not even 1% market share in this business, and this industry itself runs into thousands of crores. So even if they are able to get 10% market share over the next 3-4 years, it can do wonders to the company and the share price of the company. So Voltas is another stock that we like. The fourth one and the final idea that I have is Havells India. So Havells India predominantly 10 years back was mostly an industrial product company. So the kind of metamorphosis this company has seen changing its DNA is quite commendable. After acquiring here the Lloyd's business and starting its own consumer business, now the consumer business is almost 40% of the total business portfolio, and probably this share will go up in the coming years. And the kind of market share that it has generated in all the business categories that it is present into, at least a market share of 10 to 15%, probably there is a huge amount of still room in terms of growth, volume growth, expansion, diversification of different products, leveraging into the recently acquired Lloyd's portfolio, and margin expansion. So probably again, Havells probably can deliver stupendous returns over the next period of 3 to 5 years. So these are the 8 bets that we have across sectors, which probably millennials can rely upon in creating value. So I would say don't time the market, invest your time in the market. Probably that can create wealth. I know there can be volatility, stocks can go down, but at least if you follow a disciplined approach and a manner, probably you can be successful in markets.
So 8 fire stocks, I would say, must-hold stocks that one must have in his or her portfolio to achieve financial freedom and allow them to live the life they really want to live. I'll just repeat the stocks. It's Hdfc Bank, Bharti Airtel, TCS, Ultratech, Kajaria Ceramics, InfoEdge, Voltas, Havells India. You have left behind auto and pharma space, Chirag. Anything to buy in those spaces?
See, auto is a direct consumption story, but one kind of element or a variable which is unknown till now is how EV space is going to disrupt the entire space, because as of now, it's predominantly an ICE dominated sector, wherein combustion engines rules the roost right till now. So we don't know how fast the EV penetration will happen. Yes, there are debates on whether EV can penetrate in a country like India, where we still don't have enough charging infrastructure, which will entice the customers to buy EV-based stocks. But what happens is the stock prices are a function of perception and earnings. So earnings might not deteriorate that fast, but the perception or the risk of EV coming into the market and distorting the earnings trajectory or growth trajectory can derail or derate the stocks or keep them in a range at the best. So that's why we are staying away from those particular segment. Pharma is a complex thing, because again in pharma, I would say we do like certain stocks, but then again from a 3 to 5 years perspective, it is quite difficult to forecast as in what will happen, because see, if you remember the last episode in 2014 and 15, everything was hail and hearty for the pharma sector, and there was one problem coming out from the US market, that there was consolidation of the dealers and the sellers of the pharma drugs out there. So that was one big upheaval that happened in the US market. And given most of the pharma companies are US dependent and US dominated in terms of their sales, so that those kind of risk is very hard to perceive sitting back in India. So I would not like to give such a risky adventure to the investors who are getting into the markets for the first time, because first they need to build their trust with the markets or the stocks they own, and then they can take that incremental risk to create alpha or excess returns on their portfolio.
Thank you so much, Chirag, for speaking to us.
Thanks, Geetu.